Most gym owners obsess over revenue, but if you want real financial success over time, well, that's built with wealth, which happens after you pay your bills, after you pay your team, after you pay your taxes. So today, I want to break down the financial habits and strategies, the most financially successful gym owners I know who not only know how to keep their money, but know how to grow it and then sleep at night like a baby. My name is Mark Fisher from Business for Unicorns, and we're on a mission to help gym owners build a gym and a life you love. And certainly a part of that is making sure that we are managing the financial piece. Now, the first thing we should note is I am not a financial advisor, not a financial advisor. I'm not a CPA. This does not constitute financial advice. Legal stuff. But I do want to give you some insight into some common, I think, mistakes I see with how gym owners approach their money and some of the things you might consider doing instead. Mistake number one is not reviewing your P&L every month, right? You probably should review your balance sheet too, but let's start with your profit and loss, right? We want to be spending every month looking at how money is coming in and out of the business, not just the revenue, but also what we're spending money on. Specifically, each and every month, you should look at your biggest expense categories as a percentage of revenue. This includes your total expenses, your total non-owner expenses, your rent, your pay and all related people cost, and marketing. A second thing I think you should do every single month is, particularly because gyms, they're not that big. I mean, I ran was already probably like the ludicrously large gym in the world, and I still did this every month. It took me a lot longer and it was tedious, but every month you got to go through every item on your P&L, every expense item. I think this is super important because first of all, sometimes you'll find things that are wrong. Second of all, you'll find things that are maybe miscategorized. But perhaps most importantly, number three, you can have a real honest conversation around, is this investment earning its keep? Is it actually garnering the business some outcome? Financial mistake number two, not knowing your numbers. I'll give you a very specific example here because this happens every time I talk to Jim owner, and I love you so much. I love you just so much. But one of the things I'm always asking is like, okay, what's your average revenue per month? And gym owner says, whatever they say, $350. I'm like, okay, cool, right? Because the gym owner's just thinking about their current top rate card. They think about, okay, the current 2 memberships are this, it's probably in between. But then I'm like, all right, amazing. Well, how many members do you have? And they're like, 100. And then I ask, okay, cool. How much revenue are you doing per month? 10,000. When I'm thinking, well, that's $100 per month. So that, I think, is a very common and very important and obvious telling example of how a lot of gym owners don't really understand the numbers of their business. Now, there's a lot I could say about it, but lucky for you, I've already said it elsewhere. So if you're not currently tracking your numbers, a great place to start is to check out my video, The Only 5 Numbers Gym Owners Need to Know. Now, listen, as always, the title is... it's probably overstated. You probably need to know some other numbers, but if you're getting started, it is a great place to start to track some numbers without feeling overwhelmed. Part of, I think, what prevents a lot of gym owners from knowing their numbers is maybe they have some stuff about math, or maybe they don't feel like they're a number person. And a lot of times it just feels like it's complicated and overwhelming, but the good news is it actually shouldn't be complicated and overwhelming. Our businesses are not that complicated. The math is 6th grade math. I think the issue for a lot of gym owners is they're just not sure where to start. So if you need some help, check out that video. Number 3, another common gym owner mistake is not managing credit card fees. Now, this one is not sexy and glamorous, but I think there's 2 ways to think about this. A lot of success in any business is managing your gross profit. And what that means is there is a certain amount of money that's going to come off the top before all the other expenses of running a business. And one of these expenses is going to be your credit card fees. Your credit cards are going to take some percentage. It might be, around 3% typically, maybe a little bit more, usually not less, unfortunately. And that is money coming off of the top. So if you can find ways to improve that, that really matters. And that might not sound like a lot, but understand if you are a top gym, right? Because there's gyms that we work in the unicorn side that do $100K or more per month. Well, that's a lot of money. That's like $3,000 per month, right? $3,000 to $4,000. So over a year, you might be talking about $40,000 per year going to credit card fees. And that's leaving away the real unicorns that sometimes are running multi-million-dollar, multi-unit situations. So there's 2 ways you can address this. First of all, admittedly, this does depend a little bit on your booking and billing platform and your credit card processor, but you can call the credit card companies. Essentially, don't tell them I told you this, but let them know that you're considering other options and do your best to negotiate down better fees. I think you should do that relatively regularly. And this juice may or may not be the squeeze. I have to say that this always sounds great in theory, but in practice, it has its own complexities. But you could also look into offering your clients the ability to pay through ACH, which will meaningfully reduce the credit card fees. Number 4, not taking all of your tax breaks. Now, listen, we are running headfirst in the place where I'm going to say again, I'm not a CPA. I'm not giving tax advice. I'm not giving investment advice. Talk to your advisors. But you should be putting all of your business expenses on your business. Again, I defer to your CPA here, but the reality is, at least in theory, the government wants you to create economic activity, to provide jobs, to contribute to the economy. So you get a lot of cool benefits being a business owner, but only if you do it properly and take those benefits. And this can go wrong two ways. Maybe it's less common and certainly won't get you in as legal trouble, but one thing that can happen that's not great is putting business expenses on your personal card because you're just too lazy to get out the business card because then you got to track the receipt and whatever. But the reality is, like, look, if it's a business expense, you don't pay with your personal money. It's paying with post-tax money. Have your business pay for it. Now, I should also mention here, it ideally goes without saying, but probably doesn't. We want to really make sure that in general, there's real clear separation between your personal expenses and your business expenses. So while, yes, I'm saying your business expenses should be paid by your business, I'm also saying don't buy groceries. Don't have your personal expenses being paid by your business. This is important both for legal protection, frankly, not get whacked, but also to help your CPA and your bookkeeper and you to understand the actual performance of your business. Also, don't forget about tax advantage retirement plans. Qualified again, I'm not a tax advisor, I'm not an investment advisor, I'm not making suggestions. But you should at least look into the help of qualified professional, things like IRAs, SEP IRAs, 401ks, even tax advantage plans like HSAs if you have a high deductible health insurance. Again, this is too in the weeds for me to make any recommendations at all, nor would I, since that's against the law. But I would suggest making sure you have a conversation with a qualified CPA to make sure you're maximizing the various tax advantage retirement plans that are available for you to reduce your tax liabilities. Number 5. Now, this one I gotta tell you, this is rare. This is a good problem to have. It has a problem. But another mistake is keeping too much cash in the bank. Now, again, may we all be blessed with such a problem. This is not a common problem I gotta see, but I have had situations where I've spoken with individual gym owners and they are sitting on a lot of cash. Now, listen, it is true that you don't want to be cut to the bone, right? You want some reserve always in the bank available because things will go bump. Further, you want access to capital if you need it. Now, as far as how much money you need in the bank, there's different schools of thought. Again, I am not making recommendations, but traditionally you would say that you want, maybe 2 to 3 months at least of operating capital in your bank account. So traditionally, you would say you probably want, around 3 months of operating capital in the bank. I don't think that's unreasonable. Some people might really feel more comfortable having 6. And I think at a certain point, the emotions play a role here. I don't say that would be wrong. You might also decide, frankly, again, I'm not saying you should do it, but I'm running a little tighter. I think, I'm comfortable having maybe closer to 2 months, but importantly, having access to a line of credit, right? Because the fun fact about line of credits are the banks will be happy to give them to you when you don't need them. They're always happy to give you an umbrella if it's not raining. So if I were in your shoes, and I am, I would suggest, figuring out what the right amount is that feels right for you. Again, have a conversation with your financial advisor, your CPA, maybe your partner, and then make sure you have access to a line of credit. A line of credit, there's almost going to be no cost. Sometimes there are some modest yearly fees, but in my situation, I'd rather have access to that so that way, gosh forbid, a worst case scenario, I have access to capital without a bunch of cash sitting in the bank, not getting any return and getting eaten away over time by inflation. Because if nothing else, remember, you always have the ability to put the money back into the business. So whether you do it through the business or through a distribution, you can also consider doing things like buying CDs or things that are going to bear more interest. So that way you still have access to the money if you need it, but it's just not sitting there in cash. Though, I want to be very clear, that's not a suggestion at all. I'm making no recommendations because I am not a financial advisor, so this is not financial advice. And, qualifications aside, keep me out of legal hot water. In all seriousness, you should talk to your CPA and or a financial advisor about this. There's a lot of great books and resources you can check out. I recommend David Bach's Automatic Millionaire and Ramit Sethi's I Will Teach You to Be Rich are both, I think, great books to read about personal finance. Because, we talk a lot about business finance, or at least I try to here, but at the end of the day, part of what we're doing this for is to set you and your family up. And, the people I tend to work with, we're maybe not 100% optimizing to make as much money as we can every day, but it's part of the game. And if you're going to take on these stresses, and if you are making great jobs and careers for awesome people, and you're really adding value to your community and your society, I think it's important for you to get paid and to be smart about that money so you and your family get set up for the long haul. So ultimately, it's your responsibility to become financially educated. I appreciate your time in watching this video here. And, if you're feeling a binging mood, why don't you check out my video? One of my favorite videos, actually, is why profit is a dumb metric. How's that for a hook? All right, friends, thank you so much. As always, if you're interested in finding out more about how we work with gym owners, you can book a 10-minute intro call at go.businessunicorns.com/brainstorm. And if you want some free stuff, you can click the links below where you can find some free resources. You can follow our podcast or follow us on Instagram. And of course, subscribe to this here YouTube channel so you don't miss videos that will be released imminently, where I will cover more actionable tips, psychological frameworks, and philosophy.